bought the insurance or guaranteed those bushels, then you have the leverage to step up and sell meaningful bushels instead of 5 or 10 or 20%. If you can look in the mirror and say, you know what, I'm just not comfortable doing that, sounds good, I can't do it, well then you could possibly save that premium, is the way I look at it. If I take these guaranteed prices every year, plug them into a sample farm, 150 bushel APH, 85% coverage level, just want to show you that the opportunities that you have. Before 5 or 6 years ago, if we ever were able to guarantee $300 an acre in revenue, that was a great year. Very few times, we'd barely get above it. Now all of a sudden, we jump up to 700, then we jump up to 750. It is a completely different world you guys are looking at. To go along with that risk slide I showed you earlier, to enhance the risk you got, well, here's the good news is you can cover that risk if you take the proper policies and coverage levels, take a lot of that risk away. Obviously, this year we don't know what this is going to be. It can still vary, not as high as last year, but I'm pretty comfortable saying that. But you can see historically, we're still looking at, you can use these guaranteed prices to walk away with a pretty decent dollar per acre coverage. We do the same thing with soybeans. Here's those old prices. Here's the old APH prices. We have the yield-only policy. Here's the February averages. Here's the harvest prices. Notice we always just have one harvest price. We all use October, except this year. 2008, we have two. That's because that was the 1 year. We started off at 1336. The market went all the way down to 922 in October, but CRC capped you with a $3 coverage. 1336 minus your $3 limit, your coverage stopped at 1036. RA users went all the way down to 922 in coverage. So if you guys over here had CRC, you had a $3 price claim that year. You guys over here had RA, you had an extra $1.14 on top of that your claim was. Don't think Washington didn't hear about that. CRC and RA were very, very similar policies, but had some key differences. And this was one of them. Usually it didn't matter. This year it did. That is, I think, I give this a lot of credit for. That's probably one major reason we finally got a combo policy. Now all the policies are common as far as price setting windows or periods and guarantee or price limits, all that. So to make it more uniform, take away some of that. All right, same exercise we did in corn you can do here in beans. And how many times does it pay to get that extra price guarantee? Last year it went down. Here it went up 240. Definitely glad you had it. Here it went up 86. Went down. Here it went up $1.60. Went down a little bit. Here it went up 20. Personally, can't fully explain this. I think recent price trends indicate that you probably have a little better odds getting a higher price on beans than we do corn. You can do the math going backwards, but it just seems like in beans in recent history, we're starting to see a few more October higher highs in February. Can't fully explain that, but it is a trend that we're starting to notice. Again, you can do the math to see how many times and is that worth that extra premium. And again, I boil it down to, are you going to sell this? And if you're going to sell 40, 50, 60%, you bet. I think you need that extra coverage. If you're going to own 80% of it at harvest time, it's your call. But that's one way to possibly save money. Again, I plugged in 1215 a couple weeks ago, and obviously that still varies. Again, if I take this set of guaranteed prices for beans, plug them into the farm with 50 bushel APH, same thing we saw in corn. Here's the old levels that we used to guarantee. Again, anything up, even close to 300 was a big year. Now we're talking 550 and up. This year, 500-ish so far. But again, good prices, profitable prices. Not as good as last year, but still profitable prices if we can figure out a way to safely lock those in on a lot of your bushels. All right, here's that snapshot of how we use crop insurance in Illinois to see if we can notice any trends that maybe help you find something that maybe you're not using. Going back to 2005 to last year. Here's the old APH policies combined with now the new yield protection policies for last year. Here's CRC, income protection, and RA all combined. Here's the two new ones, revenue protection without the harvest price, and the two counties.